Oh no, you shouldn't use multiple time frames. Oh, wait a minute, you should definitely use multiple time frames. Oh no, you should absolutely just stick to one time frame.
With all of that noise, what actually works? Before we even get to that, let's back up a bit. What is time frame actually when it comes to the forex market? What is up, guys? It's Sabelo here, and in today's video I'm going to be diving deeper into the overall analysis of time frame within the market. Why how I analyze using different time frames, what is my perspective into different time frames, and why I use different time frames when I do my analysis, to give you a brief idea as to why do I use a top-down analysis all the way from a daily time frame, going straight to a 15-minute time frame. Okay, just to give you a brief example of that. Let's say you you are keeping an eye maybe on your friend who stays like 10 kilometers away from you, okay, and you are 10 kilometers away from him. So if you look at his place, you want to see when he pulls out maybe out of a driveway and he's coming to visit you, you want to surprise him, he's coming from his home. When you look at his car 10 kilometers away using your naked eye, it is going to be very hard to see the very minimal movement that the car is going to be making as he is pulling out of his driveway. But let's say you take your binoculars, you put on your binoculars and you look at your friend's car. You can be even able to spot when the reverse light turns on when you're using the binoculars to look at your friends as he is pulling out of his driveway. And that right there is why we make use of multiple time frames, so that we can be able to see the market when it is about to change direction, or when it is about to break out of structure. So that is why multiple time frame confluence is major. And make sure that you watch throughout the video so that you can fully understand how to analyze different types of time frame and utilize them accordingly. Okay, guys, so now we are in the chart. Let's make use of this pair right here. I'm gonna make use of USDZA for me to properly explain the entire process of time frame confluence. And what I'm gonna do is I'm just going to clean the entire chart, then we're going to start afresh together. Okay, let's make this full screen and then we get to it. Okay, so before we do the analysis and I show you everything, let me just explain this thing of time frame. Okay, so time frame, when it comes to price action like this, it basically means that each candlestick that you see on your screen right here, each candlestick occurred from the start to the close. It occurred on the period that you are currently on, in this case, which is 2 hours. So that means that no matter how small, no matter how big the candlestick is, they all took 2 hours each to form. Okay, so when we switch to a daily time frame, that doesn't mean that on a daily time frame we're going to see smaller candles or we're going to see bigger candles. We're going to see the same type of candlestick that you would see on a 1 minute or on a 2 hour or on a 4 hour. The only difference is that on a bigger time frame you get to see a broader or a larger perspective into the market, and the higher the time frame, the more significant the trade result or the market structure is going to be. So the higher the time frame, the more significant the structure is going to be. And as you switch to smaller time frame, it's going to hold a less and less weight on your time frame. Okay, so as you can see here, we are on a daily time frame. So we'll start with our analysis. Okay, so we find the swing low. Okay, this here is our swing low, then this here is our swing high. Okay, we have established those, the most outer ones in the recent times. So these are the most outer ones in most recent times in terms of significant structures. Okay, okay, we also have this support structure right here, which is our diagonal support structure. Let me see something. Okay, we also, it's irrelevant for now, we also have this support structure. As you can see that the market respected here, it respected here, then here this can potentially be in respect of this trend line, as this could simply we can simply also cater for this support structure right here, and this could be a liquidity grab from this diagonal support. So we can potentially see the market pushing up from this support structure right here. Okay, and then this is the closest resistance level that we have to the recent price action. So this is the closest lowest low, and this is the closest highest high. And then now, as you can see that we cannot see more details from this daily time frame. This is everything that we can easily see from here. In order for us to get more perspective inside this area right here, so that we can make a decision as to how are we going to go about in terms of fulfilling a prediction as to, is the market going to push to the upside, or we're going to continue pushing maybe to this next level here. Okay, so in order for us to properly understand everything, we need to switch to a smaller time frame. Okay, and then now we are inside our 4-hour time frame, and we want to see exactly what is happening here. And also, as you can see here, okay, this was a daily time frame, and then the market sold from there. Okay, so you can see that here we had a beautiful third touch before the market sold off. This was our first touch, then this right here was our second touch on this resistance trend line, and then right here we had our third touch on the market. Okay, and we know that third touch are associated with a market that is going to respect that structure. But from this point of view, you could have entered here after the close of this candlestick. So if you would have entered after the close of this candlestick, which is on a daily time frame, this was going to expose you to a lot of risk. As you can see, if we do it this way, okay, as you can see, because your stop loss had to be above this week of this candlestick, this was going to expose you to a lot of risk. And how do you avoid this? You make use of the smaller time frame so that you can find the earliest possible entry that might have happened even all the way at this point before the market tanked down. Okay, so how to do that? We switch to a 4-hour time frame, and then we're going to be looking for specific structures that can assist us with getting the earliest entry from this area right here. As you can see, this is still the same area that we had on a daily time frame, but now it is on a 4-hour time frame. Okay, what do we see here? Okay, we can see the structure right here. We can see the structure that was formed. Okay, so now you can see patterns within patterns. So you know that on a daily time frame, this right here is a resistance, and it is a dead touch. It is the dead time that the market is reacting to this one. Okay, and then now when we switch to a 4-hour time frame, the 4-hour time frame is giving us more insight into the market as to what actually is happening here, and we can see that this is one of the most profitable reversal patterns that we have in the market. Okay, also we are having the same type of structure as your first touch, your second touch, third and fourth reaction to now the 4-hour diagonal resistance. Okay, to make this even more interesting, okay, you can also see the structure right here. So we have this bigger channel on a daily time frame, and then we have this one which is also big on a 4-hour time frame. Then we have this one right here that is going to become very clear when we switch to a 2-hour time frame. Okay, as you can see, now that we have switched to a 2-hour time frame, you can clearly see more details inside this structure right here. Okay, and then what is this doing is it is allowing us to get in as early as possible inside this short trade that we are talking about right here. Okay, but then you can switch as further as 15 minutes in order for you to find the most earliest entry possible, so that you can capitalize on the initial move and make sure that you catch the market at the very top or at the very bottom. Okay, sorry about my network, it is okay. So now okay, let's do this. Okay, to drive the point across. Okay, so now we are on a daily time frame, as you can see. Okay, and in order for us to take a proper entry right here, we would have to enter here after the close of this candlestick. And if we enter here, I'm just gonna track this. If we enter here and have our stop loss right here, I want to compare how much did we miss out on if we were just going to use daily time frame. Okay, so now let's firstly switch to 2 hours so that we can compare that area. Okay, so as you can see that this is where we are getting our first entry. This is where we are getting our first entry if we are using a daily time frame. But if we are using this 2-hour time frame, we can clearly see these touches, which could have provided us with an entry here on this dead touch right here. Then we could have entered there, then had our stop loss like that above the range. Okay, let's switch to more smaller time frames. Okay, so now we are on a 30 minutes chart. Okay, even on a 2 hours, that was a long shot, since we didn't see all the price action inside the structure right here in order for us to come up with the conclusion as to where we enter. Okay, so as you can see here, that now we see this market structure right here, which could have provided us, after the close of this bullish candlestick, we wouldn't have just jumped into the market on the 30-minute time frame. Okay, let's switch to a 15, which is where you want to take, your entries if you want to catch the most earliest moves within the market. Okay, now you can see that there is a very big difference. Okay, if we would have entered here based on a daily time frame, but as we are now on 15-minute time frame, okay, let's look at this area right here where our third touch within third touch. Okay, so we can see that there was this huge candlestick, this was bullish, and then we started losing the momentum. As you can see the size shrinking. Then what happened? Now we had the bearish present engulfing the previous candlestick, as you can see. So we could have found our entry here at the close of this candlestick and had our stop loss just above the range. Then by using multiple time frame confluences like that, we would have been able to catch all of this move, risking just that little amount right there. Whereas if we compare it to using the daily time frame only, you can see that this compared to this risk reward, this one is more suitable and more fruitful in terms of risk reward to ratio, which will then help you expose the very minimum of your capital while catching the most amount of pips. Okay, and to further break this down, okay, you can see right here that from a daily perspective, we did not see much, and the only thing that made sense in terms of risk when we were on a daily time frame was to put our stop loss above this range right here. Okay, but as we switch to a 30 minutes time frame, we get to see more structures within the market. We get to see more inner details, which then brings me to this continuation structure right here. So this is basically telling me that we could have entered at the same place, just like we did on a daily time frame, but this time we could have exposed way less compared to how much we exposed when we were using just the daily time frame. Okay, as you can see that this was a continuation pattern here. Okay, personally I like my entries here because they then give me the very, very minimal risk, and I know that once the market breaks this structure, okay, the structure is not holding as a resistance. I personally would like to take my entries like this. Okay, let me just zoom in so you can see clearly. Okay, so after the reaction here, as you can see, this is the first touch, second touch, and then third touch, and then this is where I would enter based on this beautiful price action that is going on right here. As you can see, we are rejecting this area. We went from big momentum to very small momentum, and then bearish present, as you can see. So I would have taken my entry here, stop loss above there, and then once we broke this trend line, then that is where I'll be looking to leverage. So here I'll be having my other entries here. Okay, so this is how important of multiple time frame confluences. Look here, this is basically the same entry, but from a daily time frame perspective. Okay, but from a daily time frame perspective, look at this. What makes logical sense here is for you to cater for all of this as your stop loss area, and then you enter here, then you ride the market all the way to the downside, because based on price action, this is where your stop loss should be, as this is the recent swing high based on a daily time frame price action. But when we switch to 15-minute time frame, you can see that here we cannot see any more details on the daily time frame. These are the details that we see that make sense. We cannot see that small continuation pattern on a daily time frame, because it is currently part of a bigger price action candlesticks. Okay, and then once we switch to a 15-minute chart, and now we get to see more clearly, and we get to see more details inside this price action as to what exactly is happening right here. And then the very same pattern that we used, okay, on a daily time frame to catch this is the very same pattern that we are finding here to leverage on a smaller time frame. So this goes to show you that this pattern works across all time frames, but then you need to make use of all the time frames so that you can catch the earliest entries possible, just like how I explained before. That making use of the smallest time frame, it allows you to see your friends as it initially backs up as soon as the reverse light turns on. So this is what is happening. You get to see the earliest movements within the market, and you can then leverage on those earliest movements. Okay, with that being said, guys, this concludes the video of our time frame analysis for today. Make sure that you subscribe, you like the video, leave a comment below on what video you would like me to do next, and I will definitely make that video for you.